Hey everybody, what's going on? It is James here with Crypto Common Sense, aka Three Peaks Trading, and it's nearly midnight, so I randomly decided to sit down and do this video answering one of the most common questions I get. And that question is, which indicators do I use when I trade? And the answer is probably going to surprise you because, of course, I develop indicators and I do have subscriptions for some of my indicators. When I am day trading, I don't typically use indicators. The reason that I don't use indicators when I'm day trading is because things are moving quickly, and an indicator is going to give me some type of label that I'm then going to have to try to comprehend and evaluate. And by the time I do that, it's too late to act on it. And so unless the indicator is something that I'm willing to blindly trust, which I'm not willing to blindly trust any indicator, then I'm not going to use indicators on a day trade or an intraday trade. Once in a while, when I'm doing intraday trading, I'll put like some EMAs on there just to kind of serve as some extra confirmation. But typically I'm trading price action during the day. Now for swing trades and for position trades, I love indicators, especially my own proprietary indicators, because what they do is they save me time. Rather than having to go, for example, open a list of 500 cryptos that maybe I'm interested in, and then go through every single chart and evaluate the chart and all this kind of stuff, I can simply create a watch list inside of TradingView, put my algorithms on the charts, and then set up a watch list alert that if the alert triggers on any of those assets, it will alert me. And that's what I like about that, because it's a huge time saver. You know, it's constantly scanning charts for me. And then if I get an alert, for example, like Gravitator, popped back here, if I get that alert, then I can go look at the chart and say, okay, Bitcoin is worth taking a look at today, and then decide whether or not I want to take that trade. Or maybe like a trend tighten alert goes off. I can say, okay, up here, there's a sell label. Is that something that I possibly want to short? Or sometimes, a sell label will pop and I actually want to long it. It depends on what's happening and things like that. The buy and sell is just really the algorithm reading the market. It doesn't necessarily mean that I should buy or sell. I actually look at it, and sometimes the sell signal is actually a really good spot for me to go long. I know that might sound confusing on the surface, but people who've been through the training related to the indicators understand what I'm talking about. So I love indicators to save time. When you think about that, our time is super valuable. Like, life is short. I found that out the hard way. Both my parents passed away in their 40s, unfortunately. Life is very short, and time is your most valuable asset. And so if you get indicators that can save you, 5 or 10 hours a week, how much is that worth? But again, what I do is I use indicators to save time on swing trades and position trades, but I always use price action to make my final decision. And when I'm day trading, I'm always using price action. So let me show you an example, because there's something happening right now in Bitcoin, which is a perfect example of how I trade. So Bitcoin on this daily chart, it was in this range, which I've talked about in previous videos. This is not a Bitcoin prediction video or anything. It was in this range. I talked about how when it was down here, it was probably going to pop up, and then we'd have to wait and see whether or not it wanted to hit the top of the range or whether it looked like distribution and then came back down. Obviously, it came back down. But what's happening right now is it's just barely peaking below these levels, kind of back through this zone. And if you do use indicators, if you're not like really great with price action, you can use indicators to confirm. So for example, if I put a 200-day moving average on there, I can say, oh, wow, it came down, it's testing the 200-day moving average. That makes sense. And I can say things like, I can put a volume profile on there. So if I go over to the left here and I say, hey, let's do a anchored volume profile, where'd they move this thing to? TradingView is always, I don't know why. It's like they hire developers. I'm like, oh, we got to have them do something. So they just move stuff around, and then it makes it a pain in the butt. So if we look at the volume profile for this, cycle from the bottom, we can see that, there was some activity through here. It's a little lower actually where the main activity was, down around 100,000, but we can see that there's some activity through there, some possible liquidity pockets and things like that. And so I'm not saying you should, I'm not saying that I will, I'm just saying, like, if I saw that and I decided that maybe I was bullish, because maybe I'm looking at that expecting it to be a trap. I'm not saying I am. I'm just using this as a hypothetical example to show you how the trading works. if that's a trap and I'm suddenly bullish on Bitcoin, what I want to do before I take any trade, it's not about knowing whether it's going to go down or knowing whether it's going to go up. What it's about is when I decide on a direction, I want to make sure that it's worth taking the trade, because sometimes you might have an idea of which way the market's going to go, but there's just not enough profit to justify the risk. So for example, let's say that I'm a perma bull. Okay. I'm not poking fun. I'm just, again, hypothetical example. Let's say I'm a perma bull. Let's say that I feel like this is a pullback and that I feel like Bitcoin's going to go up to, $130,000. I'm just using that because I saw it in an article that I thought was kind of silly, but they were saying it back here that it was headed for 130, and I had posted in Discord like, these people are ate up with the stupids, right? Could happen, but it's not the most likely thing right now. And obviously it's since dumped. But let's say that I'm looking for $130,000. So if I take a long here and I pull this up to $130,000, there's my profit target. And let's just say that I'm looking at this going, well, if it's going to go back up, it shouldn't take out this tail. That's the mindset that I'm, supposedly trading with in this example. That gives me an 8-to-1 reward to risk ratio. So I don't even have to be 50% sure or 40% sure or 30% sure. I don't even have to be 20% sure. If we think about 8-to-1, that means I can lose 7 trades and win 1, and I'm profitable. Let's say that I risk $1,000 a trade for easy math. So if I lose 7 times, that's a $7,000 loss. If I win the 8th time and I win $8,000, $8,000 win minus 7,000 loss, easy math, $1,000 profit, right? So essentially, about 12.5% of the time, I need to be right, roughly, to make this profitable. So that's the number that goes into my calculations as a trader, especially on swing traders where you have more time to really think things through. When I look at this, do I feel like there's at least a 12.5% chance that this is going to go to $130,000? And if the answer is yes, that's where I would say I should take this trade based on the math. And that's very different from what a lot of people teach, because a lot of people are teaching that you're supposed to know where the market's going, but nobody knows where the market's going. Like, it's all probabilities. So for example, right now, let's say that I was bearish on this. And let's say that I'm like, oh, I think this is going to keep going down. And let's just say I thought it was going to go to $100,000. So here it is at around 106,000 right now, like ballpark. Let's say that I'm like, okay, it's going to go to 100,000, I think. So that gives me about a $63 profit target. Let's say that I'm 30% sure that that's, what's going to happen. Maybe 35% sure. Okay. Well, I need to make like 3R basically. 2R technically, but slippage and fees and everything. Let's just call it 3R I need to make in order to make that trade work. So what would 3R look like? Well, that means I'd have to set my stop loss right about there. Now that's a problem, because maybe it does go to 100,000, but maybe it does this first. So this trade is actually less attractive because it's going to have a much tighter stop loss to justify the trade. And this is where people really get confused, because they think if you have an idea of which way the market's going that you're supposed to take a trade. No, that's like just step one. You have to make sure that there's profit there. You have to make sure the profit justifies it, because it can absolutely go to 100,000 but bounce first, and then you still lose money even though you were right. Or it could do something like this where it chops around a bit and then breaks down. And again, maybe it clips you. So there's just not enough meat on that bone. You'd have to be looking for a target below 100,000. And again, maybe that happens, but the reality is when you look at that, we just saw a minute ago that 100,000 has some volume traded around it. And also it's a very strong psychological level. So, it's just not, it's not that easy of a trade to take, even if you're bearish. Neither one of them are great trades for me right now. The long, even though I'm more bearish and I lean toward this being distribution, the long has the better, reward to risk ratio. And so if I, gun to my head if somebody made me take a trade, I'd probably lean to the long side rather than the short side just because of the math behind it. But the same concept that I'm showing you right here on this daily chart, that's exactly the same concept that I trade on intraday charts, just moving a lot faster. So you're not sitting there doing the exact math. You're doing it pretty quickly in your head. You're kind of rounding things and you're just kind of ballparking. But today is a perfect example. This was the QQQ. This is just a 5-minute chart of the QQQ. And look at this, right? So you had essentially the market was moving up pre-market. It consolidated and then moved up more. But before it ever moved up more, think about this. It was consolidating in a lot of trading courses or YouTube videos and social media videos and things. A lot of times they're telling people to trade breakouts. But you have to trade breakouts if you want to be successful with it. One of the first things you can do is like try to limit yourself to trading breakouts that are breaking out in the direction of the trend. Because most of the time, a breakout against the trend is actually a trap. So for example, today on QQQ, it came down. It didn't actually break through the level, but it broke right to it. I'm sure a lot of people were like, oh gosh, this is bearish. They're probably shorting there. But in reality, it was just testing the bottom of this range in an uptrend, right? This uptrend started, at pre-market. So it ranged and then continued up. And we can even put like a measured move on the chart and we'll see this. Like if we count this as our flagpole right here, and we say this was the top of the range and this was the pullback. I know it had a little sneaky high here, but generally speaking, it's kind of a fluke. So if I do it like this, then it had a target of around 604, which it hit later in the day. If we use this high here, then it had a target around 604.46, a little bit higher, still hit that. Okay. So the market did exactly what TA said it was going to do. And so what I can do as a trader is I can look for these traps where it's trying to fake people out, making people think it's breaking down and trapping early bears. Or if it was in a downtrend, doing something like this, then I would look for it to, try to fake people out this way and I'd be shorting it before it broke down. That's my favorite trade setup. And it's not based on indicators. It's based on price action. And it's literally a bread and butter setup. It's probably not even something I should give away because it's that good. But my thought process is simple. If I can give you some really good stuff and you implement it and it works for you, then you'll be more likely to trust me and maybe try some of the other things I have. For example, the indicators that a lot of my students find incredibly valuable. In fact, I rarely talk about statistics because I find it to be tacky, but my stick rate, which is a term in the software industry, basically how long somebody stays subscribed, tends to be multiple years with my indicators. And there is a reason for that because they work. And the people that use them tend to get great results. When people cancel, and I ask them, is there something wrong? Is there something I could help you understand? Is there something that you didn't like? Almost always the answer is no, not a problem. I just didn't use it, or I'm busy or life got in the way, or, I'm just not trading right now. It almost always comes down to somebody just never implemented it because the people who do almost never cancel. So my thought process is simple. I help you out. I show you some cool tricks. Hopefully you get some really great results. And then you come back later and maybe pick up some of my indicators that have some more proprietary things. This is not necessarily proprietary. I didn't learn this from anybody. This is just from years of in the trenches experience, but I'm absolutely certain other people trade the same way. I don't think it's proprietary, but some of my algorithms, on the other hand, they are proprietary. For example, like Gravitator is a math-based algorithm. And so even if I wanted to trade it manually, even if I try to teach you Gravitator and say, hey, this is how it works, you couldn't actually do it because you'd be going through mathematical formulas and figures, and it might take you 15 minutes per chart just to do the formulas, right? Whereas the code does it automatically. So, yeah, this is, again, there's a big myth that you need a bunch of indicators to day trade. You don't. I'm always happy when people sign up for indicators, but I always stress to them, I find indicators are more useful in swing trades and position trades as time-saving tools Whereas on day trades, I find that naked charts like this are far easier to trade. Sometimes I see people's charts and they got like 15 different things in there, and I don't even know how they can tell what's happening, right? When I first started trading, I heard it called spaghetti charts. And I think that's a really good explanation. Like, some people have spaghetti charts. You literally can't even tell what price is doing because they have so many lines and indicators and bands and, all this crazy stuff. And it's like, you just don't need it. So hopefully you enjoyed this late night video. It may not be late night when you're watching it, but it's almost midnight for me. So I'm going to wrap it up. I'll edit this thing sometime over this weekend, hopefully. But right now, it's time for me to go to bed. So please remember that I am some guy sitting in a spare bedroom. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Be sure to give the video a thumbs up. Be sure to subscribe to the channel for more content like this. As always, please leave me a comment. I really appreciate hearing your thoughts and feedback. Even if you don't necessarily agree with me, it's fine. I love respectful conversations. And most importantly, please remember to trade safe.